There's the closing bell on Wall Street, and now it's Market Domination Overtime. Jared Blickery going to be along in just a moment to get us up to speed on the action from today's session. I'm going to start with major averages here. And we had some strange action in the last hour and a half or so of trading here. So pretty much sideways to down throughout the day for the Dow, off by 115 points while all was said and done. And then in the last, I don't know, a little after 2 p.m., we saw things take a leg lower and then sort of come back up to take a round trip again. So finishing down 0.25%. The S&P 500, very similar move here at the end of the session, finishing down 0.4% and breaking a six-session winning streak for the S&P 500, and the Nasdaq Composite similar there, and also down about 0.4%. And all of this happening sort of in the absence of a lot of dramatic headlines or economic data for that matter here today. Still, we see the tax bill sort of slowly making its way perhaps through Congress. We see Federal Reserve officials throughout the day saying that they are waiting for more information on the potential impact of tariffs. And so in waiting for all of that, a little bit of pause in the markets as well. Jared's got a closer look at today's action. Hi, Jared.
Thank you, Julie. We'll call that a little bit of drift and drifting to the downside here. But two markets which were drifting the opposite way have caught my eye. And yes, I'm going to mention the 30-year. The 30-year yield is up today. It hit 5%, almost hit that early on, and it exceeded that yesterday, by the way. You can see that in this two-day view. And the other market I was looking at is the U.S. dollar, and that was drifting down today. So I'll just put this on today's, and you can see going in the wrong direction. And as I've been kind of harping on recently, when those are moving in the opposite direction, this reminds me of the throwback to the early days of the tariff reaction that we saw. It really caused some upheaval in the markets, which I thought we'd gotten rid of for maybe a week or two, but that was just a brief respite. In sector action, we have staples leading, and then we have utilities and healthcare. Those were the only sectors in the green, so it was very much a defensive day for the little bullish action that we were looking at. To the downside, energy taking it on the chin to about 0.9%, not even a percentage point, so not a disaster there, but more red than green, as you can see on the screen. And if we take a look at the NASDAQ 100, what's clear is that most of the mega caps and the Mag 7 not in the green today, but Tesla doing all right. Guess what? It has surpassed Broadcom in market cap. It is to the left of it. And let's just take a quick chart of Tesla. You can see it was up quite a bit more earlier today, but if you take a look at the year to date, still underwater, but impressive rally over the last month, and that tallies to about 42% for Tesla there. Also taking a look inside the Dow, we can see more red than green there. Financials looking a little bit better than the other sectors. JP Morgan up about 0.3%. Also seeing Boeing here up about 1% or so. That's Caterpillar. Let's take a look at Boeing up 1.19%, up 30% over the last month. And then I'll just leave us on our leaders here. And guess what? Biotech having a little bit of a comeback here, and it has been struggling for sure with healthcare, but the leader today. And I'll send it back to you guys.
Thank you, Jared. S&P 500 and NASDAQ snapping their recent winning streak, volatility lingering as doubts emerge over investor relief tied to tariff de-escalation and soft inflation. Commerce Street Holdings CEO Dory Wiley joins us now with more. Dory, great to see you on set.
Great to be here.
Maybe, Dory, kind of start big picture. You're talking to your clients there from your perch in Dallas, Texas, and they ask you, hey, where's the market head from here? Do you tell them, Dory, I think we're going to churn here. I think we're going to head lower. I think we're going to move to new record highs. What do you say?
Well, that's the million-dollar question, isn't it? Well, I think from here, everyone wants to be optimistic. They're looking for reasons to be optimistic. You know, we had the Trump bump, but now they're looking for things to happen. You know, so I think the real key lies in Congress. If we see some action in Congress on this tax bill and then this DOGE cuts, which they're going to resist, that's going to cause volatility in the market. If Congress were to just come through and still kind of act and pass, if you can remember far back enough, like Reagan's first year or two, then I think that could be very bullish for the market.
Does it matter what's in the bill, or does it just have to pass? In other words, if it passes with the bare minimum extension of the tax cuts, is that enough? Or does there have to be other stuff in there?
It's probably enough. Now, I'm like you, the devil's in the details, but how often do they read the details? The congressmen don't even read the details. They just vote on the bill. So I think the key thing is being able to have skins on the wall and say, hey, we got this passed, the president's acting and he's moving. But I think he's going to meet resistance on the DOGE cuts, because we all know that that's how Congress works, right? Is through favors. and they're raising money all the time every 2 years. Those cuts are going to be a little tougher for them.
Well, yeah, that's their constituents' jobs in some cases.
That's right.
Yeah.
What about those bulls who come on the show, Dorian? Some say they just keep it real simple. They say, listen, earnings are solid. You look at this earnings season, and they say economy's running at like 2.4%, according to the Atlanta Fed tracker. That's good enough. They stay constructive.
That's good enough, and I think it's good enough for investors. You know, it's always all about earnings, and earnings still hang in there. And what is that dependent on? We're learning that this week, the consumer. The American consumer drives everything, not only here, but abroad. Everyone is dependent on the American consumer. So you saw a difference, say, like on the Walmart and the Home Depot. Walmart's got a very low margin. They got a 30% dependability on China. They're saying we don't have room, and they don't, and we're going to have to raise prices. Home Depot is much more of a consumer messaging because they have a much higher margin, and they're much more diversified in their supply chain. So we got a good read from them today. That's interesting. We're going to get a different read. We're going to get a worse read from Target tomorrow. Target has 50% dependency on China and an even lower margin, below 4%, than Walmart. So you're going to see some squawking, I think, from Target, and those just give us some indication about how the consumer's doing. You know, look at TVs, for example, coming in for Memorial Day weekend. You know, with the 30% tariff, you know, how much is that going to slow down TV sales and demand and pricing? How's that going to affect? So all this is going to be very interesting on the effect of the consumer. Is he still there? And we see the consumer cracking, right? Complaining about higher prices, complaining about credit card debt growing, things like that. But so far, the consumer has been extremely resilient. So if we get this slow growth and hang in there on earnings, it's good enough.
And is the investor base cracking, I guess is the question. You know, you and I were talking about valuations earlier on individual stocks. What about for the market overall, right? Because we are seeing PEs start to creep up again. And is that justified? Should people still be looking at the market as a whole and buying it?
You know, it depends on the stock. If we look at forward PEs of the whole stock market, it's above the 5, 10, 15-year high. We all know that. And the difference is 10 to 20%, depending on which period you're looking at. So I think that creates an opportunity for some corrections and for some volatility, but I don't expect them to be really big. This March correction, for example, was more of a fear than it was fundamental based because the earnings were hanging in there, right? So that's a screaming buy. And I think the investor will be there every time for that kind of drop until we see the crack in earnings.
What did you make, Dory, if anything, of JP Morgan CEO Jamie Dimon? He was talking this week, and Mr. Dimon speaks, people tend to listen, and he said, he talked about what he called the extraordinary amount of complacency in the market, talked about how the full effect of the tariffs not yet apparent. Do you agree with Dimon? Extraordinary complacency? Is that what you see?
I still think there's a lot of uncertainty, you know, but it depends on a person's outlook, really. There are some people that are doubters about whether this tariff strategy is going to work. So if you saw the street hates uncertainty, right? And the street is incredibly apolitical. It just wants to know the boundaries that you're going to work in. So when Trump first came out with the tariffs, the street was like, oh my God, Armageddon, Trump tariffs equal Hoot Smalley and depression. We're all going to die. And for those that had a different outlook on it and thought, well, the guy's a negotiator. He did this before in 2018. It worked extremely well with China then. I'm not so sure it means Smoot-Hawley. And that certainly looks like how it's going to play out.
We'll see. Dory, thanks so much for being here. Good to see you.
Thank you.
Well, let's get to earnings from Palo Alto Networks, out with its latest numbers. So let's talk about them here. The company coming out with their earnings per share, it looks like, of 80 cents each. Revenue at $2.29 billion, up 15%, pretty much in line with estimates here. The company's fourth quarter forecast actually leaves room for it to beat. 87 to 89 cents a share in earnings. 87 cents is what analysts have been estimating. So couple cents to play with there, it looks like, for the company. And revenue for the full year, it is raising its revenue forecast for the full year to as much as $9.19 billion. They're bringing up the lower end of that forecast to $9.17 billion. And it also looks like their forecast for the full year earnings per share is above what analysts had been anticipating, Josh.
Yeah, I'm looking at just comments from CEO Nikesh Arora talking about how in Q3 they continued to make progress on their platformization strategy, achieve an important milestone in crossing $5 billion in next-gen security ARR. Talks about how scale, platform breadth makes us a leading consolidator of choice in cybersecurity. And by the way, when he talks about platformization, what he means is locking in customers for the long term with different bundling initiatives. Analysts have broadly said, listen, if you looked at this space this earnings season, they'll talk about how cyber results, they've been volatile, but the results they'll characterize as broadly solid. The macro not seeming to have a huge impact yet broadly on the sector. We do see though, some initial disappointment, at least, down about 3% in the after hours.
Yeah, exactly. And the shares, by the way, over the past year are up about 20%.
All right, coming up, we will take a deeper dive into the latest results from Palo Alto. Plus, we're going to get you set with everything you need to know for Wednesday. Stick around, much more market domination overtime. That is coming up.
Shares of Palo Alto Networks sliding here despite topping earnings estimates for the third quarter. Morningstar equity analyst Malik Ahmed Khan joins us now to discuss. So we're seeing the shares go down. As far as we could tell at first blush, all of the numbers seem to beat estimates. They were raising some ranges for earnings going forward. What stands out to you here?
Yeah, we also thought it was a pretty solid quarter. We were really happy to see NGS ARR continue to grow. RPO, which is a forward-looking indicator, continue to grow faster than the top line, and continuing to see a lot of strength in the NGS business, whether it's Cortex or SASE or other initiatives that the company is taking in AI. We thought it was a good print. Again, we'll have to unpack some of the numbers and see what's going on. But at first blush, as you said, we think it was another solid quarter by Palo Alto.
Malik, if you had the chance to ask CEO Nikesh Arora a question or two, what would be top of mind for you?
First of all, I think a lot of investors are really interested in what the AI opportunity is within cybersecurity, in particular, when we're thinking about security operations. I know the company has talked a lot about XIM, which is their AI-driven security operations platform, to see what the long-term market opportunity is and what the long-term profitability opportunity is when we're thinking about this NGS business. I think would be sort of one of the questions I'd have.
What's your views more broadly sort of the competition between Palo Alto and some of its competitors, and how successful has Palo Alto been in taking market share?
So Palo Alto has been one of the top cybersecurity companies for a number of years now, and we've actually commended the company for catalyzing vendor consolidation with this platformization strategy that the firm announced in February 2024. So clearly, it's been taking market share, moving beyond its core firewall market into cloud security, security operations, the convergence of networking and security. And I think investors have rewarded the company, if you look at the stock chart over the last 5 odd years.
Malik, the analysts at Wedbush who cover this name, they are fans. I know they tell their clients one of their favorite cybersecurity names to own over the next 12 to 18 months. Do you agree with that, Malik? Would you recommend this one?
For sure. We tend to have a longer sort of investment horizon, but as we think about the next 5 to 10 years, we certainly like Palo Alto as one of the highest quality cybersecurity names. Some of the other ones that I'd throw out for people listening are CrowdStrike, Fortinet, and Zscaler. We think these 4 companies combined are the platform vendors that stand to benefit from vendor consolidation within cybersecurity.
And when you look at the outlook for this industry as a whole, given some of the macroeconomic headwinds that we've talked a lot about, whether it be tariffs, whether it be consumer sentiment, how much of that is feeding through to enterprise spending, if any, at this point?
So there's a lot of ways you can sort of look at this question, right? The first one you can do is you can look at surveys of CIOs and CFOs to think about spending priorities in the upcoming years. And you'll see AI and cybersecurity as number 1 and number 2 in many of those surveys. So that's another thing to keep in mind, is that cybersecurity spending is relatively insulated. It's probably one of the last things that gets on the chopping block for a company to look that's looking to reduce enterprise spending. At the same time, I think customers are looking for if they can get the similar amount of coverage, cybersecurity coverage, for a cheaper price via bundling, which CrowdStrike, Palo Alto, all these companies have been trying to get customers interested in, they're definitely going to go for that, especially in this tight macro.
Malik, final question here. CEO Nikesh Arora, his 7-year anniversary, work anniversary coming up here, Malik. He was named CEO on June 1st, 2018. I'm just curious, you know the company very well. How would you grade his time there as CEO? What's he done right?
I think he's done a terrific job. And I'm not just saying this because he may be listening, but he's done a really good job, really playing into vendor consolidation and setting Palo Alto up to be that sort of not a one-stop shop, because I don't think that's possible in security, but certainly have Palo Alto's fingers in many different cybersecurity pies. And again, if you look at the 7-year stock chart of Palo Alto, you can see how the stock market has graded Nikesh's performance.
Okay, thanks so much. Appreciate it.
Thank you.
I want to do a quick check-in on crypto prices. We've got Bitcoin that is making yet another new milestone here. If you take a look at the Wi-Fi Interactive, I'm looking at the Bitcoin intraday price. It did touch above 107,000 before taking another little bit of a back off of that, but up about 1% on the session here. We've seen it make a run as of late here, and here's the 10-day chart and sort of the little bit of a leg up that we have seen as of late. There is some stablecoin legislation before Congress that looked like it wasn't going to make it. Now it might make it. It doesn't have direct impact on Bitcoin per se, but is more part of this general sentiment, Josh, that we've seen in the industry that has become more positive as we've seen the regulatory environment really loosen up.
Talked to Mike Novogratz over at Galaxy recently, and we were talking about the gold market cap, which is roughly around 22 trillion. I asked Novogratz, what do you think? Can Bitcoin be as big as gold? Can it be even half as big as gold? Yes, will be as big as gold. The snowball adoption continues. Novogratz.
We'll see.
We shall. All right. Time now for what to watch Wednesday, May 21st. We're going to start off on the earnings front. Big box retail in focus tomorrow with TJX, Lowe's, and Target all reporting. Lowe's announcing results for the first quarter before the markets open. Analysts expecting the company to miss sales targets for both the second quarter and the full year, driven by weak housing demand and cautious consumer spending. This is coming after rival Home Depot reported this morning missing earnings estimates. CFO telling the Wall Street Journal that the company plans to keep prices unchanged despite tariffs.
Taking a look at the Federal Reserve, we'll be getting some more Fed commentary from Governor Michelle Bowman and Richmond Fed President Tom Barkin. This is coming after comments yesterday from Fed President John Williams. He signaled that interest rates are likely to stay on hold until at least September. And finally, we're going to be watching for any progress on President Trump's tax bill. The House Rules Committee planned to meet shortly after midnight, trying to send that bill to the House floor for a vote on Wednesday. That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.